Today I want to share with you a couple of the pitfalls that the general public falls into. And these are three terminologies that's generally used within the short-term insurance industry. The first is material misrepresentation. The second is material change in risk. The third is non-disclosure. Now, before we commence unpacking each of these topics, it is essential for you to understand that your insurance contract is based on utmost good faith. If you haven't watched our video yet of how premiums are calculated, we suggest you go and have a look at that, because in that video we explain the importance of underwriting and obviously giving true and complete information to your insurance company. Now let's unpack material misrepresentation. Material misrepresentation is nothing other than your insurance company having asked you a very specific question and you misrepresented that information. As we have previously mentioned, if an insurance company asks you a specific question, the chances that there is a rating factor involved in that question asked is highly likely. So the rule of thumb is simply, if your insurer asks you at underwriting stage a question, it is advisable to give them true and complete information. If you are uncertain as to the information, it is your responsibility to go back, check the information, and come back to your insurance company. We will, in future videos, unpack the common material misrepresentations that people typically fall into, so please watch out for future videos. Material change in risk simply means that from inception date of the policy, something happened in your life. You got a new job, you moved to a different suburb, you bought a new item, or somebody else started driving the vehicle more regularly. Something has changed in your risk. Your insurance contract requires of you to make contact with them whenever any of your personal information and or risk changes. So when you move address, or whether you get a new job or buy a new item, it is advisable to inform your insurance company. The third topic that we refer to is non-disclosure. Now, non-disclosure, many people get confused about this perception. Non-disclosure is an instance where, for example, you are privileged to specific information pertaining to your risk, which you have a duty and a responsibility to disclose to your insurance company without them asking a specific question. For this purposes, let me give you an example. If you have recently been caught and spent jail time for a fraudulent activity, when you phone your insurance company, they might not ask you whether you have previously been convicted for fraud. The reality is you have that information and it is your duty to disclose this. So please be careful. If there's any items that you believe or information that you are aware of that can impact your risk, to discuss it with your broker, financial advisor, or insurance consultant. More is always better. Rather explain your risk in greater detail and allow for the insurance company to underwrite you appropriately. As I mentioned in the beginning, insurance contracts is based on utmost good faith. What will happen under these different topics, material misrepresentation, material change in risk, or non-disclosure, it can result in a claim being rejected outright, your policy voided from inception or the change of the risk, and ultimately refund less any costs incurred. So an insurance company always has to refund your premiums when they void your policy, but like I said, that also means that there is no underlying claim. I highlight again, utmost good faith. Nobody understands your risks and your circumstances better than yourself. Play open cards, be truthful, and I assure you that you are securing your financial future in the event of a claim occurring.